Today we're looking at Marathon Digital Holdings. By the end of this video, you will know the story behind the numbers of this publicly traded company. And thanks to the magic of editing, to you it'll feel like a sprint rather than an actual marathon. Let's dive in so that your wisdom can blossom. In a prelude to the financial statements, we see an auditor complaining that the company has retrospectively changed its accounting for crypto lending arrangements. I think we've stumbled upon a crypto business. Oh joy. Auditor also complaining about what the company defines to be revenue. This is a blockchain mining company. Auditor here, kind of cute, trying to describe it as providing computing power in crypto asset. I mean, they're not wrong. His accounting firm doing a good job of getting involved in some things that I'm sure they didn't expect to have to learn about when they got into the accounting profession. After a relatively long auditor letter, now we're at the consolidated balance sheet. The company does hold more quote-unquote digital assets than it does cash. However, it has sold off quite a lot of digital assets in the last year. Income statement. The only chance of this ever making money is that it will swing into profitability. This is what it looks like on a per share basis. If this does not slow down at minimum, then this company cannot escape serious trouble. There are basically no companies on earth that can have their losses accelerate this quickly in a sustainable way. Statement of cash flows. One thing this company very much does have going for it is that it's almost 80 million of its expenses are non-cash expenses. It legally has to consider it an expense when the price of the cryptocurrencies it holds fluctuates. In other words, just like if this company were an investment fund, SEC rules are a bit broken. They hide the underlying performance of the business. The company has continued to put in well over 100 million in purchasing additional cryptocurrency in just the latest year. It's also got a little bit, not sizable, but a legal reserve payable. This is them having a little piggy bank for lawyer fees that they will need in the future, assuming they're going to get sued at some point. Oh fun, oh fun. Well, from the opening move, we need to understand that this company, at the bare minimum, is a fund of cryptocurrencies. It has an operating business of mining blockchain in addition to that. We really should gather facts in order to pick apart the operating business from the holdings of digital assets. A benefit of investing in them is that you don't have to pay income taxes when you never make money. It's been a while since I've seen a company say something like that. Definitely makes sense why the auditors are so angry in their letters. Here we go. So in 2021, they entered into a partnership agreement. Here's the name of the fund if you guys want to look into it. More common way to talk about it is a shell corporation just to hold Bitcoin for this company. 4,813 Bitcoins. The lawyers in that partnership must be questioning so much. The company does pay advances. The cost of the mining rigs, because so much of it is paid up front, it is going through contracts that depend on the price of Bitcoin. And so Marathon saying, don't make us pay for the entire rig until we've been able to mine Bitcoins. If you give us a mining rig, we'll pay you an advance and then pay you the rest of the purchase price as we profitably mine Bitcoin. Of course, as the price of Bitcoin falls, as it has in 2022 and 2023, that means those advances are a lot less valuable, and the company starts to have increased impairment expenses. This is where we were seeing how the income statement can skew towards such a big loss so quickly. The company, prior to the latest annual report, was celebrating the success of... Hey, if you're getting more comfortable uncovering the stories behind the numbers, please like and subscribe. 3.5 exahashes per second to 7 exahashes per second. The slope of the profit curve, and then the price of Bitcoin somewhat collapsed because so much of the operating business depends on vendor contracts that include contingencies according to the price of Bitcoin. Then even the operating business is subject to wild swings in income statement profit. As a reaction, they're going to, from the 7 exahashes that they were already proud of, they're aiming to make it to over 23 exahashes per second. And again, remember, this would not be profit, this would be the growth rate of profit after recuperating variable costs. The way to think about this is that they need a certain level of exahashes to break even. The level of exahashes that they need to break even is dependent on the price of Bitcoin. The lower the price of Bitcoin, the more exahashes they need just to not lose money. Here they're hoping that 23 exahashes will be enough to get them into profit territory. Their plan to get there is to partner with some entities in Abu Dhabi. If it works, it certainly depends on whether the price of Bitcoin stays the same, goes up or goes down. And if they successfully have this project increase their exahashes per second to 23, by their own calculations, that should get them into profit. What happens if the price does something different? Well, I want to take us back to the income statement and remind everyone that they're almost guaranteeing that these costs of revenues are going to increase as much as necessary to get from 7 exahashes to 23 exahashes. This is what the net income losses have been looking like. If things change in the market, either for better or worse, that will have large effects on this net income. This is why the auditors are so nervous. This is why the SEC probably isn't going to change rules anytime soon. While these numbers swing a lot more than they would in most companies, that's not the SEC's problem. It's because this company is willfully pinning its fortunes on the market price of digital assets when it fundamentally does not really have much say in what the market price will be. Therefore, investors really got to ask themselves, if I want to invest in Bitcoin, which is essentially what investing in this company would be, is this really the right way to do it? We're now going to pull in the Sage Seeds AI in order to give us its take as a value investment AI. It does look for cash flows, which there's no way to get around that. If you want to be a value investor, at some point you have to be looking at cash flows. However, the AI isn't necessarily caring about high-level concepts like what is a Bitcoin. It's not going to have biases associated to that because it's just purely going to look at the financials without really having any vision of the debates going on top of them. I definitely encourage you to guess whether the story we've been uncovering here is going to be ranked as a value story or going to be ranked very much not a value story. I do tend to stay away from giving you guys middling rankings, and so this very much will be rated either high or low. The point of that is that through practice, this channel is going to give us all an intuition about whether the stories behind the numbers do or do not represent value. Please like and subscribe. When it comes to developing the intuition, pausing the video in order to guess what the AI is about to say is better done when you can have a quick conversation with someone else, hopefully agree, disagree, and at least give a little explanation about what it is you're thinking. It just makes it that much better to practice. MARA is ranked 267 out of 284 in value for the 2022 season, ranking quite low. I'm going to interpret what the Sage Seeds AI seems to be picking up on. Whenever Bitcoin's price goes down, this company is not going to be having a very good time. However, it goes deeper than that because the operating business is making this different than just investing in Bitcoin directly. On this point, Sage Seeds AI is actually quite neutral, surprisingly neutral. A lot of times having a middleman invest in Bitcoin for you would just be extra cost. But while it's definitely early days, Sage Seeds AI has already seen that kind of balance out in the financials. Whatever it is that Marathon does, they're getting increasingly rewarded by having to invest less of its own capital. And so even though there's not profit on the income statement yet, the company has rapidly decreased the capital that it requires. Again, Sage Seeds AI has no idea what it is this company does at a philosophical level, but it is smart enough to pick up on the fact that this company might be better than investing in Bitcoin directly. All businesses can change over time, but if nothing else, the people involved in Marathon are genuinely experts in blockchain, and if they were in a better industry, their expertise would probably be being rewarded a lot more than it currently is.